Hello viewers, hope all of you are doing well. Myself Mrinmoy Yogi, welcome to my channel Minutes View. Today's video is a very important one for you if you are an investor. In today's video, I will cover almost all topics related to investments. I will classify the investments in 10 different points and also arrange them on the basis of their risk factor. See, the safest one will give you the lowest income and the most risky one will give you the highest growth. So based on that, you have to decide which investment factor is best for you. So stay with me till the end of the video because this video you will find to be very much useful. In fact, if you have been in my channel for some time, I think you will say that this video had been the most useful for you till now. Okay, before we go ahead, if you have not yet subscribed to my channel, please subscribe it. Subscription gives a lot of motivation to the video makers. So please click the subscribe button. Without wasting much time, let's go ahead and start the topic. So here we go. 10 investment instruments ordered by risk factor. That is, the 10th one will be the safest and the first one will be the riskiest. The safest one will give you least outcome and the riskiest one will give you highest outcome. You can choose accordingly according to the risk that you can take. Okay. So let's go ahead. Let's see which instrument has been given the 10th rank. Yes, it's bank fixed deposit, government banks and private banks. And they are the safest ones. Mostly they are 100% safe except a few exceptional cases. So any government bank is virtually 100% safe and private banks are also safe mostly. And they give you returns of the range 7%, 6%, 5%. Within this range only they give you the returns. Different banks give you different returns. So if you want to invest safely, so this is the best option for you without taking any risk. You won't lose any money in this because whatever is promised, whatever interest rate is promised, you will definitely get in full. Some of the similar instruments are there. See, not to make the video too big, I have categorized these within the same point only. So similar to the bank deposits, you have the option for recurring deposit. You can do it recurring deposit in any bank. In recurring deposit, you just pay monthly with a monthly basis without paying in lump sum, as in case of fixed deposits. More options you have. Monthly income scheme is there. It also gives similar kind of interest rates as equal to the fixed deposits. Also you have Kisan Vikas Patrika, National Savings Certificate, and also different pension plans. Most of them give you fixed incomes only. So they are quite safe. In fact, they are almost fully safe. And but the the negative thing is that you will earn very low in these instruments. But if you want to stay safe, you can invest in these instruments. Okay, let's go to the ninth point. Slightly less safe than this, but that will give much more returns. Let's see what the ninth point is. Yes, it is NCDs or company fixed deposits. NCD means non-convertible debentures. In case of NCDs, generally companies launch NCDs to collect some huge amount of money. They launch these NCDs online. You can buy NCDs online. They generally give you 8 to 10% interest per year. You can choose the plan according to your requirement. You can take monthly interest NCDs or cumulative interest NCDs. And similarly, company fixed deposits. You have companies like Sriram Transport Finance and Hawkins also brought out some company fixed deposit in between. In the meantime, I think still it's 3-4 years ago. So NCDs or company FDs, they are slightly riskier than those fixed deposits, but those bank fixed deposits, but they give you much more interest rate. So this is the 9th point. Let's move ahead to the 8th point. Yes, it is debt mutual funds. See, mutual funds are of basically two types: equity and debt. Equity will come later on. We'll discuss about them at that time. In debt mutual funds, they are quite safe. They are almost similar to fixed deposits only, and their interest rates are also in the range of 8% to 12% generally. And mostly in the debt mutual funds, you don't incur any losses. they try to give you fixed incomes only, near fixed incomes. So if you want to invest in a slightly risky option, and mostly it should be safe, your money should be safe, so debt mutual funds are a good option. Two types you can invest in, either it lump sum, that is you invest the entire amount together, or you can invest in SIP. SIP is systematic investment plans. So in that you will invest monthly. So on monthly basis you can make the investment and enjoy the profits. So this is a medium kind of not medium, it's among the safest ones only. So let's move on to the more riskier ones. Yes, number 7, you get equity mutual funds. Equity mutual funds give you higher returns as compared to debt, but the risk factor is slightly higher, not slightly higher, in fact considerably higher, because equity mutual funds directly moves up and down with the share market. If Sensex Nifty comes down, the value of the NAV of equity mutual funds has also come down significantly. And if Sensex and Nifty goes up, then equity mutual funds value also goes up. They the NAV, net asset value. Mutual funds are always purchased based on their NAV, net asset value. So some of the similar instruments are there apart from these equity mutual funds. NPS is a government scheme. It's a national pension scheme. See, in the first point with fixed deposit, I said several pension schemes of the type fixed, because they give you fixed earning. But here in case of NPS, you don't get a fixed earning. It is dependent on the market. So this is the reason why I have kept this NPS term along with equity mutual funds. More options are there. NFO, new fund offer. NFO generally company launches. You can get them through a demat account or your online trading accounts, and not much difference, but they're new fund offers actually. So many times they give you some good profits, and with some minor risks, some nominal risks, you can take some risks. So equity mutual funds are quite advisable to invest in. I also invest in equity mutual funds. NPS, NFO, all are good options. OFS is offer for sale. Some companies might offer you this OFS concept also, so you can take them. All of these are having slight risk, but they give you good incomes. So this point, equity mutual funds, NPS, NFO, OFS, they are quite advisable. Most financial experts will advise you to take these ones because they give you some good returns at a minimal risk. Okay, let's head on to the sixth point. Yes, in sixth point, I have kept two instruments, commodity and currency. They give somewhat similar output outcomes only. See, commodity you can't purchase directly, like shares. In case of share, you can purchase a company share directly from the equity market. But commodities you have to purchase either in the form of futures and some options, or you can purchase some ETFs, commodity ETFs. Exchange traded funds. The full form of ETF is exchange traded funds. So commodity like gold, silver, or other commodities also, soybean, these and many more. I think even oil you can purchase. So many more commodities are there. Some food commodities and some metal commodities. So metal commodities give you a higher returns, and remaining commodities give you comparatively lower returns. But still, it is a medium type of not medium type of still it's quite safe only because commodity does not go down drastically, except in a few cases. If you are purchasing gold, it is a quite safe purchase because gold rate usually don't go down. Silver rates are a bit risky, so among commodity also there are differences among different commodities, so you can purchase accordingly. Currency means Indian rupee to USD or Indian rupee to euro and others. And forex I won't say because in India forex is not legal, so you have to trade in currency only. So currency is Indian rupee to USD, Euro, GBP, and others. And on the other hand, forex, as it is used in other countries, forex is you can trade from USD to euro, you can trade from GBP to USD. So that thing is not allowed in India. It's not legal in India. Forex is not legal in India. Make a note of it. And so you can trade in currency, INR to USD and INR to any currency. So yes, currency is also a good option. It also does not give your money too much of risk, and it also gives significant returns. So these are good options. Let's go ahead to the fifth point. The fifth riskiest investment instrument is shares. These are companies' direct shares. You can straight away open your own demat account, or you can also purchase from a broker. You purchase shares for long term or or short term based on their requirement. Many shares are there. Instance in S&P BSE 500, 500 stocks are listed. Many more stocks are listed in different markets. Nifty, Sensex you have. You can invest in some foreign markets also. So also you can buy them through futures and options. If you buy them through futures and options, the demat companies and your brokers give you some margin also. Some margin means the amount you have, you can purchase more than your your deposit amount. So shares are such that they rise with the market and fall with the market. Particular shares can continuously rise, and particular shares can go down also. So they are medium type of risky. Not They are not safe as FD or debt mutual funds, and also they are not too much risky. They are medium kind of risky. They carry an element of risk, and at the same time you can earn a lot. Sometimes it happens that you are purchasing a 100 rupees share, and within a year it reaches the 300, 400, and even more than that. So your earning might be quite high, but also at other times there is a risk. Every investment opportunity of this type carries a small risk that it might go down, and if it keeps going down, like you have seen in some of the stocks like Yes Bank and those, see, they have come up later on, but when they were going down, those who have sold the stocks, they were in loss. So you have to plan the market accordingly. When market is down, don't sell them. Buy them in a bearish market and sell them in a bullish market. Bearish means when the market goes down, and bullish means when most stocks are going up. Okay, so till now we have discussed 10th to 5th rank. Four are left. Four investment instruments are left, and those four are the most riskiest ones, are the most risky ones. So before we go ahead, let me make an appeal for your subscription. We'll continue the video after that. So friends, now we are left with the last four, in fact the first four investment instruments. These four are the most spicy ones in the field of investments. Why I'm saying them spicy? Because they're highly risky, but also they can give you huge returns. And risk takers enjoy a lot while playing with these four instruments. So before we head on to the last four, in fact the most riskiest four instruments, if you have still not subscribed to my channel, please click the subscribe button. Subscription does not cost you anything, neither it is going to give me any financial profit. The only thing subscription gives me or any video maker is your motivation. So please subscribe the channel so that I can come up with more and more videos of this type. Okay, so without wasting any more time, we would like to head on to the first four, the riskiest and the spiciest investments instruments. Please stay with me till the end of the video. Okay, so now let's move on to the last four, the most spiciest ones. So the fourth rank goes to cryptocurrencies. Yes, many people might not be knowing much about cryptocurrencies, as earlier it was not one of the popular ones in our country. But nowadays, day by day, you can see cryptocurrencies are gaining more and more interest among investors. There are many cryptocurrencies are available in the market: Bitcoin, Ethereum, Tether, Binance Coin, and many more. And they are quite risky, as you can't say for sure in which way they will go. Because sometimes it happens that some of these cryptocurrencies, sometimes they go up, sometimes they go down. At the same time, the legality also matters in different countries. So before investing in cryptocurrencies, you need to know about whether it is legal in your country or not. So rules change about cryptocurrencies, but apart from all the risks, they give you some considerable returns. Like Bitcoin, you have seen within last 5 6 years, it has increased significantly. In fact, many millionaires have become billionaires. Many poor people have become millionaires those who purchase big Bitcoin at the right time. So that might happen with these newer ones also. So you have to time and place your orders accordingly. So cryptocurrencies, you should invest only if you have considerable knowledge about them, and you can't buy them in most of these demat companies. You can't buy them. You can buy them only from these particular apps like CoinSwitch, Kuber is one of the popular apps. More are there, Coinbase, Binance, and others are there. So you can see which apps are legal in your country to purchase cryptocurrencies, and even cryptocurrencies are legal or not in your country, that also you have to see. So you can try investing in cryptocurrencies in lower amounts at the beginning, and never invest too big in cryptocurrencies. Invest in lower amounts only, because even if you get enough knowledge of cryptocurrencies, then also invest at least up to 30-40% of your complete investment. Don't invest more than that. Investing everything in cryptocurrencies is quite risky, because even if it goes up, the laws about cryptocurrencies are still changeable in most countries. So you can invest a nominal amount and take a small risk in cryptocurrencies. Okay, now let's go ahead to the third point, one of my favorites. Let's see what it is. Yes, this is intraday trading. It is the same share market only as in the fifth point you saw the shares. It is the similar thing only, but in this case you sell and buy the same day, and this makes it quite risky as well as giving you higher returns. See, in case of intraday trading, you get a lot of benefits. You get to buy and sell the same day. Also, some margin facilities allowed by the demat accounts. So, like if you don't have enough funds, you can you can use the margin facility from demat accounts to purchase more than your funds. And even there is option for your funds against pledged holdings. What pledged holdings means is that uh, pledged holdings means suppose you are having delivery shares of some amount, so you can use up to 80% of your blocked amount of your amount that is blocked in delivery shares. You can use up to 80% of those funds for intraday trading, even if you don't have any money extra. So that is a good thing. If you are having suppose 50,000 amount of 50,000 shares, so you can use up to 40,000, nearly 40,000. Banks calculate on their own, up to 40,000 by pledging your holdings. And see the second point, this not, this buy and sell same day here only. First you see it's highly risky, no issues. You have to take risk to earn more. Buy and sell same day. Short sell is allowed. Yes, this third point, short sell allowed. What is short sell? So in case of delivery, in case of commodities and many more, basically in case of delivery, you buy first and sell later on. But in case of intraday only, it is allowed that you can sell first and buy later on. Suppose you calculate that a particular share will come down towards the end of the day, so you can sell in the morning and buy towards the end of the market. So this is a good option for you to sell first and buy later on if you are sure that the value of the share will come down. So these are certain benefits of intraday trading. It's although it is risky, but it give you much higher returns as compared to many of the other instruments. Okay, now let's move ahead to the second one. The second one, what will it be? Let's see. Yes, this is fantasy games, fantasy cricket. I have made many videos on this topic earlier also, so you can go and check out those videos in my channel. If you had already subscribed my channel, then definitely you would have seen these videos also. And okay, I will not go much long with this fantasy games, because many more videos I have already made on this topic. So basically I would like to tell you these are some cricket, football, and other games. You have to predict your playing 11, and based on that you get points. And many people will say that this is not an investment, this is a game. A game is also an investment. It is a faster mode of investment. You earn more as compared to the other instruments. That's why I've given it the second rank. It's risky, yeah, definitely it's risky, but you earn more than those other instruments. So some of the popular apps, Dream 11, My 11 Circle, Player Spot are there. These apps, if you want to invest in these apps, My 11 Circle and Player Spot, you can check my channel's About section. You'll get the link there. So through the link you can join and get some extra benefits also, like 5,000 rupees not 5,000 rupees, 1,500 rupees bonus My 11 Circle gives you. Also player spot gives you some bonus amount. Okay, many more apps are there. Later on I can make another video to discuss all of them. So before moving forward, now only one point is left. Let me make another subscription appeal. After that I will tell you the final one, the most riskiest one. Okay, so guys, by now we have reached towards the finish of the video, and only one point is left, the most riskiest one. 9 points we have already discussed, 9 investment instruments. I hope you like them all. And again, if there are viewers who have not yet subscribed to my channel, please click on subscribe button. Please give a subscribe, because subscribing gives a lot of motivation to the video makers. Also, you know, YouTube is very large and you may not find out a channel later on if you wish. See, similar channels are so many, and if you are watching this video till now, it clearly means you have liked the video. But if you don't subscribe, maybe afterwards you won't find this channel anymore, because if you search out in the YouTube, you will find many more similar type of channels. Many of them are fake, many of them are not of your use, and the likes. So that's why I ask you to please subscribe my channel, so that you don't miss out any of these important videos of your interests. So here we go. Time for the first one and the riskiest investment instrument. What will it be? Any guesses? Let's see. Yes, they are called HYPEs. Full form of HYPE is high yield investment programs. See, the basic concept of HYPE is that a businessman or a company directly takes the money from the investors and use them in their business, and then pay them back on either daily basis or weekly basis. Even twice in a day also they can pay, because they are direct businesses. Uh, See, suppose some businessman takes rupees 10,000 from you, and on day one he earns a 20% profit from all his sales. Out of those 20%, 2,000 rupees, he pays you rupees 500. And second day he earns 1,000, third day he earns 3,000, fourth day he earns 2,500, and but every day he pays you an amount of rupees 500. That means every day you are getting a return of 5%, and he promises to pay back your principal after 2 months, that is 60 days. So how much you will earn in these 2 months? After 60 days, your 10,000 rupees daily for rupees 500 means your interest amount will be rupees 30,000, and you will get back your principal amount also. That means 30,000 plus this principal amount of 10,000, total 40,000. So by investing only rupees 10,000, within 2 months you earned 40,000 without doing anything. So it is a very fast way of earning, but in most cases hypes goes scam. So you have to be very careful while investing in it. And the best idea is to invest in hypes only if you know its owner, if you know what the company is doing. Otherwise, never invest. In fact, I personally don't suggest investing in hypes, because because almost except a few, almost all hypes are scams. So if you search in the internet, you'll see different hypes. Even if they are having paying status also, then also afterwards they stop paying and you lose your money. So that is the reason it is a very risky one. You can invest at your own risk only if you properly know the owner in person. If you know the hype company's owner in person, not only in internet, so that you can go and catch him if he runs away with your money. And also you have to check the legality of such companies. Most of them are illegal only, so don't invest in any illegal company. Invest in legal companies only. So it's quite a tough task to verify which hype is genuine, because almost all of them are fake. So I personally don't suggest you to invest in hypes. You can invest only if you properly know the company, if you properly know the owner, and you know what they are doing. Then only invest in hypes. Otherwise, 9 other instruments I have already told you, so you can invest in them. And okay, it depends on the the amount of risk you want to take. So before investing in any hype, firstly check they're legal or not. Further, you also need to check like if the company is a stable company or not, and the owners you have to know personally. Then only invest in hypes. Otherwise, it is risky, and most hype goes scam. And if you search in the internet for genuine hypes, you'll see many hypes they are currently paying properly, but that does not mean that they will not scam in future. Many hypes they pay currently, but they scam in the near future. So these were the 10 instruments we have discussed. I hope you understand all these. 10th to first, the safest one to the riskiest one. Okay, fine. So that was the list of all the investment instruments ranked from the riskiest one to the safest one. I hope you find the video useful, and you can use these investment instruments based on your needs, based on the risk you might take. Even some of the instruments, if you don't use, you should have the knowledge. That's why I made this video, for your knowledge as well as your profits. So this much in today's video. Please click subscribe button. Please give a like to this video. Till then, take care. Bye. Thank you.